Good afternoon, everybody. Thanks for sticking around. I heard we're the last panel, so we'll try and make things interesting. Joined by a brilliant panel here. Looking forward to this. We're talking about crypto trends going forward, and really, I just want to maybe just start going across the board. What are some of the broader themes that we are looking at, that we can expect in the year of insanity and collapse and ruination? You want to start, and we'll just go down the line?
I can start. Yeah. I don't know if can we hear me? It does. Oh yeah, now it works. Okay, perfect. I see from my own perspective. I'm the chairman of two brokers, Bitcoin brokers actually, and I'm the CEO of NIM Technologies, which is working on privacy. So I have a bias on those themes, of course. What I see on the Bitcoin side or on the brokerage side is that there is it's going to be the winter will continue for some time, right? But the liquidations have we went through most of it, let's say, and so it will be a time where there's a lot of a growth in real usage of crypto. So, for example, I studied how many companies are being created with a capital in crypto. So that's a real usage, right? Because I have crypto, I want to build my company, and instead of putting Swiss franc, I'm putting USDT or I'm putting Bitcoin. And that number is like on an exponential scale in Switzerland. So we have around 400 companies and 100 companies, new companies, only last year. So that trend is going to continue. And you can see usage of USDT is very strong. And that will feed into the DeFi, and it will feed into other things. And the other trend that I see is, of course, the aftermath of Tornado Cash, where there's a kind of like reveal from a lot of people in the community saying, oh, actually, we can't do everything transparent like we thought was a good idea. We have to make execution secure and provable. But actually, the assets, who owns the assets and everything, that needs to be much more surrounded with privacy. So privacy tech is going to be a big thing also this year, and there's a lot of companies working on it.
We'll come back to that. Definitely want to follow up on Tornado Cash. Lucas, you want to? What do you see coming?
Sure. Maybe very quick introduction for me. I'm Lucas. I'm from Safe, and we're doing a decentralized custody protocol. Just so you also have some context of where I might have biases or stuff. So we build infrastructure for all the builders to build smarter self-custody systems, which brings me also to my prediction for next year. I see there being like a big refocusing going on across the ecosystem, like refocus to what's working, refocus to also our values as a community, as an ecosystem. Probably the two most important ones I see is focus on self-custody. Again, here I'm a bit biased, but like we've been preaching be your own bank, like not your coins, not your key, not your crypto for like ages. But like we've only seen with FTX what this really means and how important this is. So we see a lot of players in the market really figuring out like how can we actually reduce counterparty risk, like what's actually the risks involved in working with a custodian, how can we make things better, smarter, and like the DeFi and self-custody is the solution here. It's not the problem to what happened to FTX. So I see a big shift there. And the other one is also a refocusing on the multi-chain area or like multi-chain ecosystem, whereas through the bull market we had like this immense scaling need, and it resulted in like a lot of LL1s popping up. Some of them are not really sustainable, and especially not mentioning any particular ones, but some of the exchange L1s, I'm not sure if they're really that value add for the ecosystem. So I see refocusing also to Ethereum, to EVM, like the roll-up centric scaling strategy of Ethereum, but also some other L1s that maybe have some more of a cross-chain strategy from begin with, and less kind of the monolithic L1s that are out there. But I see I speak already since 3 minutes, so hand it over.
Ali, you want to take us away?
Yeah, sure. So again, as a way of introduction, my name is Alia Dasgupta. I lead business development at Signum Bank. Signum is the world's first crypto asset digital native bank and has been at the forefront of being a regulated player in the space. So we got our banking license back in 2019, and we were the first player to get this. But since 2019 till, let's say, mid-2022, it was a hard sell. There were people who came to us and said, yeah, we're trying to burn the banks. What are you doing in crypto? And so on. And today, particularly at the end of 2022, the position of Signum in the market is now a lot more in the direction, let's say, of where the market is going. And particularly going into 2023, in terms of the trends that we sort of see emerging, I think it's almost not worth saying it, but regulation will be at the forefront. We will be looking out for big regulatory moves from the US as well as from the EU and MICA and so on. And the position of players or the role of institutions in kind of blending centralized and decentralized finance will continue to grow. And yeah, that's the pitch from this side of the pond.
Bastian, what do you see happening?
Yeah, hello everybody. My name is Bastian. I work with CVBC, so a venture capital firm based out of Switzerland. We also run our ecosystem business with CV Labs. We also have the blockchain hub at Promenade. Do a lot of stuff here, write reports. But picking up on Lucas, so I like what you say also, like, people are actually building again on Ethereum and the main L1s. And since I'm mainly looking after, from the investment side of things for our accelerator, I see, emerging projects where they're building on. And now we had applications from 61 different countries, so all over the world. And most of them are either building on Ethereum or EVMs, Binance Smart Chain, whatsoever. And really see that trend coming back. And the other trend that we're seeing as well is, in the past, always during those crypto winners, people start talking about asset tokenization, right? Whereas in the past, the big institutions wanted to build on private blockchains, and now they're moving back to public blockchains. I think this is also definitely a trend that we're seeing, and also becoming more agnostic to blockchains, multi-chain, et cetera, et cetera. But it's interesting to see that most of the projects are building on EVMs. And I mean, obviously, since we're a VC, we're always analyzing trends in the crypto field. We see, still in the DeFi space, stablecoins is very big, and we see, or we want to see more stablecoins that are not US dollar pegged, but other stablecoins as well. I think, me personally, I would like to see that as well. And then synthetic assets besides stablecoins, prediction markets, DeFi optimized L1s, for instance, on a Cosmos ecosystem to foster transaction throughput speed, fees as well. And then, of course, also the adoption of institutions to adopt DeFi. But that's going to take a bit longer, I guess, as always with institutions.
So I want to jump on that, and I will revisit FTX and its shadow in a minute, because it kind of has a big hangover. But in terms of actual developments and adoption this year, can we expect any kind of meaningful movement, or is it gonna, are we still in another year of just trying to build these tools, build this infrastructure, and hope that it'll be ready for an audience or for a user base at a future date? Alexis, you seem like you want to.
I'll try the answer. I think there is already adoption, but we don't see it because we don't measure it. And it's not the adoption I wished, but it is, right? But you have to go into certain countries, because in Switzerland you don't see it. If you go to certain countries, then you start having hints on it. So if you go to Ukraine, if you go to Turkey, these are countries where there's a massive usage of USDT. And Binance is taking over that place. And why don't we measure it? Because the banks, this money doesn't go through banks, and banks are used to measure this, and Binance don't give statistics, right? And why don't? And also the very important reason why people don't say they're doing this, because those people they are used to used dollars before. In Turkey, dollar was already being used. In Ukraine, the same. They are used to use an app to move their dollars. So their environment didn't change. They moved from their banks with dollars to Binance with dollars. And they don't say they think it's the same thing, but it works better. And this adoption is happening to the point that we believe, and this is people from the central bank in Ukraine, believe that more than half of the transactions in dollars in Ukraine last year went through stablecoin instead of SWIFT. So, yeah.
Okay, yeah, I mean, for that point, obviously, we need USD-pegged stablecoins, but I was rather thinking of like euro-denominated stablecoins.
Oh, yeah.
I mean, for other countries, right, so in our next acceleration program, we're going to have a company that is doing donations, right, for those countries, and they want to have USD stablecoins. They don't want to have local currency because up to 40% of donation money is lost because of cross-border settlement, because of FX loss, et cetera, et cetera. And so for those countries, absolutely, we do need USD-pegged stablecoins.
Well, Bastian, what do you think is preventing the development of these other, fiat-pegged stablecoins? Is it lack of liquidity, lack of interest, lack of, just companies willing to put the money in to invest, or is it something else?
Well, I guess first of all, everybody knows US dollars, and so the world is not using euros. If you look at other countries that are not using their own currency, usually they're using US dollars, right? So I guess that's mainly a part. And then once we get into more adoption, people may think of, okay, maybe it makes sense to have a euro or a Swiss franc-pegged stablecoin. I think that's more the mindset, in my opinion.
Just to respond.
You go first and then.
It's also, I think, representative of how it works in the FX markets as well, right? Most trades in the global market, whether it's oil or even just general FX, it happens against USD. And I think we're sort of seeing that replicated in the crypto world as well, for better or for worse, because the US dollar isn't the most, let's say, stable asset to have your entire financial system based upon. But there are efforts out there to build euro coins, and I don't think there's any dearth of players in the market. It's just a little bit to your point before, the interest to kind of trade against it or use it as your backup. And I don't know how we can possibly get the industry to pivot maybe a little bit away from it.
Yeah. I think the dollar, like you say, the dollar is the main thing in the traditional market, so people use it. Yeah. And a lot of countries have the dollars in the mental model as a normal thing. And you have to see what you're competing against, right? So if you're building a stable euro, euro is basically a big payment system that works well, and you can have instant transfer of euro with the SEPA network. So moving to euro crypto doesn't give an advantage, right? And the Swiss franc, having a Swiss crypto, why would you use Swiss franc in the world view? Switzerland is a small market, 8 million people. Why use Swiss franc? To put your Swiss franc in a bank account. And so why would you have a stable coin that is not in a bank account? There's no interest for that. So what we are seeing is a dollarization of the world through crypto. And euro and Swiss franc will have their niches, but won't be crypto.
Lucas, you look like you wanted to say something earlier.
I mean, one thing I definitely want to say is that most people, they use stable coins not in like their day-to-day, really to pay salaries, to pay like in the supermarket. They use it maybe in lending protocols or like in other DeFi protocols. And they really don't care. They just want something stable, but they don't care if it's like euro or Swiss francs. I think it's once we see more of these like have day-to-day use cases where you actually don't want to have the FX risk there, and then maybe the demand from the users is also increasing to then have your local currency instead of some foreign currency.
Yeah, but I'm a Swiss company and I'm paying a lot of things in crypto, and the few people who are in Switzerland, they don't care, or they accept also USDT, or they want USDT or USDC. So, I mean, most of the market right now is there.
So this is not among. For the audience, we had a quick discussion earlier. I sent them a list of topics I want to talk about. I want to throw that out the window for a few minutes and follow up on this because this is fascinating. In terms of, this idea that crypto is helping the dollarization of the world, is it just because of the dollar's role in the in the global financial market? Is there I mean, I guess the last year or two, with the pandemic and with monetary policy being what it is, probably, aiding the dollar in that. To what extent is crypto and, DeFi kind of going along with it rather than building its own, unique infrastructure? Oh yeah, you look like you're.
It's a hard question, right? Because one point I can add to what the others have already said is the use or the importance of stablecoins in economies that are, let's say, a little bit less stable politically. And so you mentioned Ukraine and Turkey, but also this is the case in Latin America, where most or a huge percentage of the population are actually taking their salaries in USDC or Tether. And by definition, if all of these people are engaging for their daily finance with US dollar, then that is by default becoming the base currency of the crypto ecosystem as well. And I don't know if this is something necessarily that anyone had a plan for or people wanted this to happen. It sort of happened by default, and I personally find it really hard to sort of swallow because we're again dependent on this centralized player in the US, even though we're trying to build something much more utopian and better.
Yeah, I mean, as she said, it's definitely a very, very tough question. And I'm a bit biased since I did my research in CBDCs. And so I think stablecoins and CBDCs is a different topic, right? Because stablecoins you need for more the Web3 native space, whereas CBDCs would maybe come into place for settlements for banks, et cetera, so more like the institutional adoption. But the question about CBDCs is, can we assure privacy, right? And this is also the thing, if you look at other countries, for instance, China, I don't think they're granted any privacy, right? And so I think this is the main topic, why also it takes so long until we get that adoption for CBDCs as well. But I think it really boils down to the use case, and it's definitely also a competition between stablecoins and CBDCs, and I think they should work closely together because we see great projects, and then regulation is also come into place later on for stablecoins, especially for algorithmic ones. And now we have new regulations in the EU with MiCA, so this is also going to make it much more difficult for a lot of stablecoins.
So I absolutely agree. I think stablecoins and CBDCs are two different topics. As far as their kind of adoption and development goes, it seems to me there's two real prongs that you're looking at. One is the regulatory aspect, how are lawmakers coming at it, and the other, I think, is from the crypto industry, the infrastructure aspect. So, Lucas, I want to throw to you on this idea of custody and tools that people can use. What can be built or what should be built this year to to help make it easier for people to protect their privacy while still engaging with either stablecoins or potential future CBDC or even just crypto in general.
Yeah, so I mean that's a bit wrong for me to say because we're building self-custody infrastructure, but to be honest, no one wants to have self-custody. Well, it's a very niche thing, let's say it like that way. Like 99% of the world population doesn't want the responsibility that comes along with self-custody. They want the control, they want the power, they want the flexibility, but they don't want the responsibility. And I think what we've seen so far is that we have this dichotomy of like either you take all the responsibility yourself, like you have like your own private key, you have your wallet, and then if something goes wrong, no one is there to help you, no one is there to hold your hand. Or the alternative, you give all this responsibility to a custodian, and they manage they have the OPSEC risk, they manage the keys, and then you have this intermediary that you need to go through. You have this permission system, and I think we're going to see this dichotomy being broken up, where you will have much more hybrid solutions where you can have some part of the control yourself, but outsource some control to custodians, to insurances, to other trusted parties, but in a way that still retains the values of self-custody, where you can, at any point, if you want, cut cords with this custody provider or pick and choose who you trust for which aspects for custody. So I see a lot of innovation coming our way from that part.
This is going to be a weird question. Is there any way of creating a self-custody tool that has all the benefits of self-custody and yet enables you to have a, either a backup or an easy way of recovery if, whatever, your wallet is left in your pants pocket, it goes into the washer, and everything's ruined.
And I'm quite kind of shilling my own project here, so, but I have to, because this is essentially what we are about, to build blockchain accounts that you can program in different ways, where you can have you can program some private keys that you hold yourself, which may have some level of access to your digital assets, but you can program other private keys that you give to a custodian, or that a custodian has, which has other types of assets. And even myself, like, I know how to self-custody my assets, but if there would be some kind of custodian that I can have some arrangement with, where I say, I have my keys, I do my transaction how I want, but in case I lose my keys, or in worst case, there's like, I'm not here anymore, like, there's some way for this custodian to then regain access to this account through some requirements, maybe. Maybe needs to, maybe this is written as part of a legal contract, how that can be done. And technically, it's possible. We need to figure out probably the business models around it first. But I think that's where we're heading for sure.
Yeah, I just want to add, so I'm fully aligned. I'm fully also using Safe and using full custody solution. Actually, the hardest part is not the technical part, because all the solutions about several keys, future transactions, pre-programmed transactions all exist, but it's all it's the social aspect which is not done yet. What is the perfect thing? With my family, with my co-founders, with my lawyer, the bank, whatever, how do I structure who is in control of what? And that's missing, and it's education, I think, most of it.
I mean, one part of this journey is to see it from, who you leave your keys to, whether it's when you're in an organization, who the kind of fail-safe is, who can come over and take control of those funds. But then another really important aspect to consider is the technical savviness of this person. So if I, God forbid, died tomorrow, I don't think my husband would be very comfortable dealing with my private key setup. And so I would much rather give him access to, a trusted friend, and that means automatically bringing in a second counterparty who I may or may not trust to that extent, and creating a sort of safety net where these assets aren't just sent into the vapor, never to return. And I think working together with DeFi protocols or technology providers, as well as trusted players in the ecosystem, Signum being one of those, there's the creation of hybrid offerings that can sort of bridge that gap, to your point.
Maybe we should work together.
Oh, what a good idea.
Making deals, that's how we do. Alexis, I want to jump back to you. So, earlier I mentioned one side is the infrastructure side, the other side is the regulatory side. From your experience, working on privacy tools, this is where we're bringing it back to Tcash. Regulators don't seem thrilled about this idea of like a purely, anonymous or privacy supporting tool letting people do whatever. So, how do you navigate that? What middle ground is there right now?
Yeah, well, there are many aspects about privacy, and one of them is very Darwinistic approach. That actually, as more we move on, and as more regulation comes in, and as more there's tension with the old system that is trying to break the new system because it's taking its place, projects that will have enough privacy, it will be a way to protect themselves, and they will actually prevail compared to the ones who are too transparent, because the too transparent are the ones you can catch first, right? So there's this Darwinistic thing that is going to happen, right? And then there's also a thing is that these tools, especially, for example, we are not building when NIM is building a mixer, we're not building a mixer of money, we're building a mixer of the network level. So it's a different type of mixer. And it allows people to have secure communication between themselves without being observed. And actually, this is something that even a bank can find useful, because if you have a discussion with your client, what is happening right now is that Google, Swisscom, every person who's on the route of the traffic between you and your client can see and can just take the data and analyze what is happening, the relation, the profile of your client and everything. So there will be a tendency, just in a data economy, to start to use this privacy tool just to secure this data between you and your client. So privacy will win. It's just a matter of like who's failing, and Actually, I think that the ones who are failing are going to be the one too transparent. And Tornado Cash, for example, was, for me, too transparent, too obvious. It was on-chain. They had no other protection than being on chain, and they were actually providing a service for money mixing. So that was a target for them.
And this is also why I think the two projects of yours are super interesting. Also, speaking of digital identities, I mean, you need to have a certain privacy, which is key, right, if you want to have a digital identity. On the other hand, you need to have a private key recovery or a custodian for your identity as well. And this is also something that I'm personally thrilled about for the next couple of years, to build up those digital identities in the internet, but still to have some sort of a mixer that, you know, not everybody can track what you're doing on chain.
So we have about a little under 9 minutes left, and I said I wanted to get back to the FTX hangover and regulatory issues therein. I guess basically, what's going to happen? What needs to happen before we get past this idea, the specter of FTX? In particular within DeFi. Obviously, I think understand that decentralized finance and centralized companies like FTX are two different beasts, but I think the broader world sees it all as just this one big crypto bucket. So, what has to happen? What needs to happen for this impression to change or to, move past it? Oh, yeah.
I think greater accessibility is really high on that list. So the response to FTX, as you said, on the broader market context, has been to put all of it into a big bucket and say, is crypto dead? But actually, at least from my experience, especially with people who are less deep in the crypto sphere, has been to say, hey, wait, FTX was a centralized exchange. That's not the same thing as DeFi, right? And to kind of have that maturity of viewpoint from somebody outside of the ecosystem was a surprise to me, and also something that I see as one of the major signs that the adoption globally is sort of maturing. It's not just someone buying a little bit of Bitcoin exposure, through an FTX wallet, but also people who are buying that little bit of Bitcoin and then also considering, okay, maybe I can put it to work, maybe I can wrap it into an Aave pool, or maybe I can get some yield from a different protocol. And the major barrier still, I would believe, is just easy tools to access it. And outside of the Ethereum ecosystem, I think with the Near protocol, for example, they're doing a lot of stuff with simple email logins, even to your Near wallet. And I think those sorts of approaches will kind of bring us to the next level.
I definitely think we need to make self-custody or some sort of hybrid custody more accessible, because that's the reason why people default to like the centralized institutions. And there's definitely good ones like Signum, but there's also the ones that usually have then the power to attract the most attention is because they maybe have some shady business model behind it to finance this and attract attention. And that's usually then why most people default to like an FTX. But if you have a better alternative, and that's really up to us as builders to really figure out what's an alternative to giving your assets to a flawed custodian. But then obviously it's also from a regulatory perspective, how can we make sure that these custodians then have the obligations and the reporting rules and everything that then allow users to make us an educated decision on who they trust, who they don't trust?
Yeah, I think especially for onboarding, that's why we have so many CeFi institutions. Customer onboarding is much easier for CeFi, right, than it is for DeFi. However, on the DeFi side, you have much more transparency. You have, over-collateralized loans. Most of the times, you do have automated liquidations. So per se, it's much safer than CeFi. However, if you look at Terra Luna, it also happened that they have like 20% yields paying out of their investors' money, and it's not sustainable. So it really also boils down to the governance. But it's the same for CeFi. So I think governance is key. So how do we actually govern either within DeFi or CeFi? And I think in the end, it's still people, right? You may have protocols, everything is written in code, but it's somehow still people, right?
Yeah, I will just put 2 points. One is education. People have to learn, because right now you learn how to use money at school. You know, when you're a kid, you learn how to play with the merchant, right, with coins, and you don't play with crypto at school yet. It will come, right? We need to get to that level, because then people can start recognize what is good and bad. So it's a generation thing. And the other thing is regulation. And here I'm going to be very negative, because I think some smart regulation can help. And we see that in Switzerland there's no FTX, and there's a reason for that, because the regulation has been kind of smart by just saying, hey, let's apply the normal law. And sadly, most of the regulation in the world we see in France and other countries, they will do wrong. So it will go worse before it will get better.
To that point on education, I really like that. It's like, I even think this is almost like a state-level responsibility at this point. And I do like the Ministry of Digital Transformation in Ukraine has this like goal to make, I think it's like 50% of people in Ukraine crypto literate by 2030, like kind of as a North Star. Like, this is what nation states should do, what's also the responsibility. It doesn't just help people to then use these technologies more prudently, but it also helps spur like a lot of innovation in that country, because if people know how things work, they're much more inclined then to work on improving it even further.
Cool. So we have about 3 minutes left, 45 seconds each. Whatever you can think of, what should people pay attention to? What would, if anyone has one takeaway, what do you want that to be? And Alexis, let's start with you.
Yeah, for me, my takeaway, because I've been trying to do this, is to measure things, because there is a world of politics, a world of finance, which right now is still in denial about the reality of what is happening. And one of the things that we don't do, or where it's hard to do, is to actually measure the real impact that we're having, because even the community ourselves, we don't see the real impact. So we don't see the USDT users, for example, in Ukraine, we don't see them. We have to try and measure that.
We talked about it, but for me it's really what happened to FTX is not an issue of crypto. It per se doesn't have to do anything with crypto. It could have been done with any other assets or capital markets. Like, crypto is the solution for this. We're building the tools to be independent of intermediaries, or at least have better checks and balances between users and intermediaries. I think we just need to repeat this all over again, like all the time. Like, crypto is the solution for what happened. It's not the problem.
I think with the oncoming regulation, both in the US and in Europe and Asia as well, there's a lot to be said for taking a this is a controversial view, I'm sorry for whoever I'm offending, to take a slightly less purist approach to the whole crypto journey, which is to bring in the space for regulation, because as long as you can have regulated interactions in the cryptosphere, I think the power of this technology can go a lot further, and I think that's what 2023 will bring us.
Yeah, I mean, my take is, over the last couple of years, we've been building new stuff, because we had, virtual machines where you can build stuff on. And now we're entering an era where we actually need to focus on the stuff that we have built and get it to mainstream adoption. Maybe money for donations, maybe money for, countries with high inflation, or maybe digital identities, or also hybrids. Think of supply chains, think of auditing, accounting, think of proof of reserves. I think now we're entering an era where we're building actually applications that are much better than before, and we need to focus on those applications and get them to the broader public as well. So I think this is somehow the shift for the next couple of years, in my opinion.
Gotcha. Well, thank you all. Thank you, Bastian, Aliyah, Lucas, and Alexis, and thank you 1inch for having us. That is, I believe, last panel.